Everyone. I'll do a short video because the current setup needs a bit more explanation. Yesterday we had CPI, met expectations, and bonds started selling off and are continuing to sell off now. I'll go into that a bit later. Market went up, Qs was the overperformer, which I didn't expect at all. Like I thought we would get a rotation, and I still think the only way for the market to continue going up is through rotation. Basically, for the past 2 weeks, it's as if the market, like we had a snap of the fingers and decided to pump mega caps, and they basically all, with the exception of Nvidia, went to their highest OI level for calls, which I'll show in a second. But Tesla pump, Apple pump. Sorry, let's do daily. So Tesla pump, Apple pump, Nvidia started going up yesterday, but it's still questionable, and the top is 150. Google pump, Amazon pump, and so on. And what I mean by going to the highest level, like for example, this is Apple. Highest OI level is 250, and we went there yesterday. Actually, let's show you like this. So highest OI level is 250. This has been visible for quite a while. Like if we go back to, let's say, a month back, let's go November 1st, and I'll keep November 1st for showcase purposes. Basically, 250 was the target. I thought we would get to this, but not all of a sudden. Tesla had 400, we went to 400 and overshot a bit. This is again from November. Google had 200, we're very close to 200, and so on. So Google had 200, Microsoft 250, or 450, sorry, 450, and visible here. Amazon had 200, and so on. You get the idea. Meta 600 here. And I'll go back to today. Basically, they all hit it, and I don't know how they can keep going up, honestly. Uh, some of them are in overshoot as well, like Tesla is an overshoot, Meta is an overshoot. The only one that hasn't hit its max is Nvidia, which still has 150 from a couple of from a while now, and we got that pullback here. Maybe it will go to 150 as well, and that's when the madness ends. But yeah, like they all hit their max, and we're getting to a point where we're gonna face resistance. And as you can see here, for example, for Apple, 200 is the other magnet, and it will very likely pull us to it into January, because all this delta, this is positive delta, let's call for or call delta, will mostly expire. Well, a shit ton of it will expire in January, like you can see here. Like this is probably like 70% or something like that of all delta. And when we get this expiration for December, it will be a bigger percentage of the remaining delta than now, because December is pretty big as well. So yeah, what this means is, let's say you have a 200 call, you held until expiration, then you have to exercise the position, or it gets automatically exercised because you cannot hold it beyond expiration. So do you hold the calls? Do you sell them to take profit and maybe start a different position and so on? The expectation is that there will be some selling, because as these calls get exercised, the dip in the money ones, like for example, Nvidia has a huge amount of them, or Meta, or basically all mega caps. And for mega caps, the expiration that matters is January, not December. For indexes, it's December, uh, not January. But it kind of creates a strange situation between January and December and January. Now, the point I'm trying to make here is that the market needs to rotate, or it it cannot keep going further. We have basically squeezed most we could have squoze from mega caps. With the exception of Nvidia, like I said, we still have to get to 150, and it's possible we get there. Maybe Netflix at 1K. Netflix has 1K as the biggest level as well, and we seems to be going towards it. But Meta has overshot, Amazon has overshot, Google still has a bit to go, Microsoft is right there, Apple is right there, Tesla overshot, and so on. So we don't have a lot of room, and it's either rotate or I don't know. Breadth-wise, we still haven't improved, still going lower. Yesterday's volume was shit, but we pumped on the volume. Now, going to yields. What this is a market tantrum. Like the market has quote unquote decided that the Fed shouldn't cut and is fighting the Fed. The level that we will likely go to is this one. This is uh, based on current Fed funds rate, and it's equivalent to 4.6, the current Fed fund rate, which is 4.6.2. This one. Let's change the color. Okay, so this is the current Fed fund rate equivalent, and it seems to be drawing us to it. Uh, I am I don't like it obviously, but I am not concerned because lots and lots of time on the big positions, and I'll probably load up more on some March calls when if we hit this. So based on yesterday's CPI print, which is in line, the expectation is that 98% the Fed will cut, and I think this is accurate. I think the Fed will cut next week, but the market is saying the Fed should not cut. And to prove the point that the Fed should not cut, yields are going to the level of the Fed not cutting. But if the Fed will cut, they just as at this point here, it dampened a bit, even though we knew the Fed was going to cut and yields went even lower for a while. The same is happening here. But at the end of the day, they still had to go to this level and it went even higher and so on and so on. So the bond market is tantruming, is saying the Fed should not cut. The Fed will cut anyway, and then the market will have to come to the realization that the Fed cut, and then yields will move down again, and TLT will move back up, and um, the level that we have to go to is this one. This is the level where bonds will be at if a Fed cut is this one, 4,375. So 25 basis points means it goes from 4.5 to 4.75 to 4.25 to 4.5. The average between these two is this one. So once the Fed cuts, yields will drop back down to this level because they cannot leave a spread to be uh, exploited, or they will not do that for too long. It will probably stay here for a while, and then eventually it will accept reality and move back to this level. Uh, Depending on what the economic data will be over the next couple of weeks, it may stay here for a while, it may go immediately here and stay here for a while, it may overshoot and so on. But until we get some more scary economic data, expect some bouncing in this range. And this is absolutely normal, like nothing to be concerned with yet. But yeah, like even at the previous bottom, it went up, did a big correction, went up again, another correction, and so on. So this kind of thing is part of the normal moves of the bond yields. It's fine because we have a lot of time on our positions for TLT. Okay, now I still believe that we have to get a rotation. Rotation means going from what we have right now, meaning this mega cap driven move up and basically lots of red here into mega caps down and this red. Because there's still a position for December. Let's do Apple for example. We are extremely overextended here on all time frames. I would expect we will go down a bit into OPEX, not necessarily immediately. Like I would still expect a push towards above 250, like poke above 250 and then get rejected. And we will go back to the equilibrium price if, for example, for Apple, the equilibrium price here would be 240, meaning that price where the threshold is 0.8 on delta, meaning 80% positive delta, 20% negative delta. Negative delta is basically delta to the right of price. This is the price level. This line here measures how much delta there is to the right of price, which is generally out of the money calls and in the money puts. And this side here measures how much delta there is to the left of price, meaning in the money calls and out of the money puts. So right now, as of yesterday's close, what's this? This is 81%. So basically 81% of all delta is in the money calls and out of the money puts. And if we were to cross 250 and close there, we would have 88% or almost 89% in the money calls and out of the money puts, and very few out of the money calls and in the money puts. This generally is not sustainable. Like whenever we get a push to this level, it's sustainable short term, but within at maximum weeks, we should expect an offset. And that offset can come in two ways. One is price drops back to an equilibrium level, which in this case would be somewhere around 240, or positioning shifts, meaning more positioning comes in and shifts this so that price stays flat or goes even higher, but it measures less delta. So for example, let's say price would go to 255, but 255 would become the zero point 0.8 level. This is what I mean. Because new calls came in here or new in the money puts came here and so on. So this is how things have played out. Over the last 2-3 months, we have always gotten the second one, meaning positioning shifts so that it allows for even more expansion, even more expansion. But as we go into December expiration and as for indexes, because indexes have a lot of positioning um, in the money. Let's look at SPX. This takes a while to load. Yeah, you see like this is probably like 60-70%. And we have these huge levels at 5K and 4K deep in the money that will have to be um, exercised and closed. And it's it should impact the index. But because the index is so mega cap driven, what is happening is that mega cap positioning takes precedent and mega caps won't be affected until January or won't be affected strongly until January. So yeah, this is kind of the setup right now. Moving forward, not a lot has changed. I don't think we can go higher right now, especially with the mega caps coming into their respective resistance levels and some of them overshooting. The balancing out of the overshooting ones pulling back a bit and the ones that haven't reached their maximum still going up should give us more of a choppy setup. So I still think this is a top area. Maybe again, maybe we overshoot a bit, like actually hit the all-time high again. So like in this 607, 609 range, uh, uh, and then pull back again. But even as it stands, we have made a lower high now. Like even with the move up yesterday, we have made a lower high, and this lower high should stick. Like even if you push higher, we shouldn't actually go up to here. We should only go up to here, and this will last for a while. Eventually, we will lose this level. This first test, what I said, will generate a lower high afterwards. For now, it has happened until proven otherwise. So it will be a period of stabilization. Let's do horizontal range. Basically, we do this, and eventually we lose this, and we will actually go here. I would expect this to happen for December OPEX, not after December OPEX, before December OPEX. And it's a very, very fucking small drop. Like, it's not that big of a deal to go down, even relative to the top. It's just 2%. Like, it can be in a single day, it can be over 2 days. Two minus 1% days are nothing. So I would expect we will hit this during OPEX week. We have the expiration on the 17th, 18th. So I would expect that the window of weakness starts here, and we will see the pullback into 595-ish somewhere in the second half of next week. But again, it can come at any point. Things are incredibly sketchy with breadth. Either rotate or this is coming. If the market rotates, then we have the potential to go a bit higher. Not much higher either, but that's kind of it for now. Okay, have a good one. Bye bye.